Hello, it's Jordan, and this is your precious metals video market update. This video is being recorded on the late evening of Wednesday, May 11th, 2016. And starting off, let's take a look at the daily candle charts for GDX and GDXJ. We have GDXJ on the top, and in both charts you can see the 50-day moving average, and we've outlined immediate support and then strong support after that. Now, since the peak at the end of April, it's been about 8 trading days, so tomorrow would be 9, Friday 10, and the rebound that we've had the last 2 days, prior to that, it looked like the gold stocks were going to break lower and have that 20% correction that I've been talking about in some of my work. But the last 2 days, they've popped right back up, and so now it's looking more like they're consolidating like they were in March. Now, for me personally, I would like to see a 20% correction now rather than later, because if they continue to rise here, they're going to have a bigger correction later. And I'll get to that in the other slides. But so right now the gold stocks are in a consolidation, and probably will continue into next week, or either that or they'll break out to new highs, and then they'll really run into some kind of an interim peak. But anyway, let me get to the next slide. And this is the bull analog chart for the Huey Gold Bugs Index, and everything is plotted on the scale of the current move, which started January 19th at 100. We also have the move that started at the end of 2000 and the end of 2008. And at this point in time, both those other bull markets corrected at least 20%. And the Huey so far has been following the 2008 rebound, and up to this point in time, the Huey had, at that point in time, I mean, that bull market up to this point in time had already had two 20% corrections. We haven't had a 20% correction yet. We've just had a bunch of 10% corrections, and I mean, we've had another one here so far. The longer the Huey goes without having a 20% correction, unless it consolidates for several months here, that just it means it's likely we're going to have a bigger correction later. So this just shows it's overdue for a correction. Doesn't mean it's going to happen now, but if it doesn't happen now, I do think it's going to happen in the summer. Now, here we have the daily chart of the NYSE Gold Miners Index. This is GDM on stock charts, and this is the parent of the GDX index. So if you plot GDX here, it's pretty much the exact same chart. And what this historical chart shows is that there's a very strong target around 800 to 810. Note that that was where the peak was in 1996. The key peak at the end of 2003 was also resistance in 2004. And then if you go back to 08, that's really where the gold stocks crashed, and they had a vertical rebound. And at that point, the rebound began to be less vertical. And in 2013, 2014, you can also see that that was a key resistance level. So that is strong resistance. Now, that equates to 29 for GDX, so keep that in mind. But I'd like you to turn your focus to the bottom of the chart, where we show the GDM's distance from its 100 and 200 day exponential moving averages. And so right now, the gold stocks are the second most overbought based on these indicators in the past 22 years, with the most overbought was there in early 2002. And what happened then is the gold stocks had a quick 37% decline, and then after that they grinded their way higher, but they were really in about an 8 or a 9 month long consolidation. So that's something to keep in mind as to potentially what kind of correction or consolidation we could see if this overbought condition continues, and if the gold stocks continue to rise into the resistance that we've noted here. Now, Okay, let's look at the resistance and support on the weekly candle charts. Again, GDXJ is at the top, GDX below. Start with GDX because we noted that 29 based on that historical chart is resistance. Um, for GDX, I mean, there's resistance at 27, 28, but then strong resistance at 30. I also want to note there's the gap there around 31. 32 is the 38% retracement of the entire bear market. So keep those targets in mind. I mean, with the way gold stocks have been acting, if they are going to have that type of 2002 correction and consolidation, I would think it originates from 30, maybe even 32, more so than 27 or 28. But we should keep 27, 28 in mind. But if I had to guess, where's this peak going to be for GDX? I'd say 30. GDXJ, a little more options there because the resistance is more spread out. The strong resistance is at 50, and then you have initial resistance at about 43 to 45. So, I mean, who knows? It could the peak could be. I mean, my guess would be around 43 to 45. I would be surprised if GDXJ shot all the way up to 50 before a major peak. I mean, that's another. What is that? Another 33, 34% or so. But these are targets to keep in mind. And look at the blue line. You can see that the miners, 3 weeks ago they had that big move that confirmed the breakout of previous resistance. So I mean, there's clear support there in the 50-day moving average, or in this case, the 10-week moving average for both those charts. Note that it's intersecting there, or about to, with previous resistance. So in case gold stocks break the support we showed in the first chart, look for them to test the strong support here. But that's pretty much where we see things right now. I mean, the miners are obviously very overbought, but they have strong momentum. And in that kind of situation, as far as understanding when the next peak might be, you want to look and see where the strong overhead resistance is. And I think we've defined it here. Again, for GDX, the key targets are 28 and 30. And note that based on GDM and the past history, that projects to about 29. So 28 to 30, 29 or 30, keep that in mind. And then for GDXJ, you have about 43 to 45. And then after that, 50. So there you have it. The gold stocks, so far, they're in a bullish consolidation. If they break below support, initial support on the daily chart, they'll probably test the 50-day moving averages. If not, they might consolidate for a little while longer and then continue to move higher. And if you'd like to get a free copy of my book and also an update to the book, which is in the form of a report, which contains a lot of historical charts and where we can expect things to go if this is a new bull market, go to thedailygold.com/book. Follow the instructions and you'll get the book instantly. And if you want to learn more about my work and see more of my work, go to thedailygold.com. Again, you can get my book, get my free newsletter, which we send out every Saturday night. We send snippets from our premium updates, which we do Saturday afternoon, or we send out Saturday afternoons. That's all for today. If you have any comments or questions, feel free to email me, jordan@thedailygold.com. Thank you all for listening and watching, and wish you all the best, and hope to do another video update for you in the days and weeks to come. Thanks.